July was the second straight month of solid job gains in the United States. The Labor Department says employers added 209,000 jobs last month. That dropped the unemployment rate down to 4.3%, tying a 16-year low. The good report pushed stocks higher on Wall Street. The Dow Jones Industrial Average gained 66 points to close at 22,092. That is its eighth straight record high. Let's get an assessment about the job market and the stock market and what it means for millions of Americans. I'm joined by Mark Vittner, Managing Director and Senior Economist at Wells Fargo. Mark Vittner, welcome to the program. So just how good a jobs report is this?
Well, it's a pretty solid report, pretty much from top to bottom. 209,000 jobs exceeded what folks were looking for. We had a small upward revision of the prior data, and we saw that a very wide majority of industries added jobs. Over 60% of the industries that make up the employment survey added jobs during the month of July.
Why is it doing so well? What's the driver behind this?
Well, I think that after 8 years of economic growth, things are finally beginning to broaden a little bit. Previously, most of the growth that we saw in the economy, most of the improvement was coming from either the tech sector or the energy sector. Then energy faltered a little bit, then oil prices came down, and that things slowed a little bit in 2015 and 2016. In this past year, we've seen that global growth has picked up, oil prices have rebounded a little bit, and so really for the first time since the recession, it seems like we're firing on all cylinders. The strength we have in the economy is broadening. It's reaching not only more industries, but more parts of the country.
So when you say it's firing on all cylinders, you mean literally everywhere and every kind of industry?
Well, I wish it was literally everywhere, but it's in more places than it used to be. And there are a lot of places. You look within a state, you go to Tennessee, for example, and Nashville's been booming for a long time, but Memphis really hadn't been doing all that well. Memphis is finally beginning to see some stronger economic growth. And some of that is that we've had so much growth in a handful of areas that their unemployment rates have gotten low enough that companies are now searching for other places where they can find workers, find office space, find industrial space. And so the strength of the economy seems to be reaching more parts of the country.
So now let's talk about the stock market. It also seems to be roaring. And we said a minute ago, it's apparently its eighth straight record. What's going on there?
Well, recently, a lot of that has been in the tech sector where we've had very good earnings. And the stock market and the economy are somewhat reflecting the same thing. We had a slowdown in the global economy in 2015 and 2016, and when the U.S. economy was outgrowing the rest of the world, and the dollar shot up in value. That made it very tough for companies to boost their profit margins. Within the last year, we've seen that global demand has picked up, and more than half of the earnings of the S&P 500 come from overseas. And that stronger growth is translating to stronger profits. And that's what's taken the market up.
And we see that wages are finally beginning to pick up a little as well. But what about, Mark Vittner, what about ordinary Americans? You still get the sense that many people say they don't feel they're part of this great boom, this recovery that's taken place.
Well, America is a vast country, and you've got people of all walks of life, and so it's not surprising that a lot of people, and I would say most people, aren't really tied into the stock market, at least not directly. But I can tell you that companies are more likely to add workers and boost salaries and expand their operations when stock prices are going up than when they're going down. When the stock market's going down, and we're talking about 8 straight losing sessions, actually longer than that, when we have a pullback that persists, there's a lot of pressure on corporate managers to find cost savings. And so a weaker stock market may show up to ordinary Americans a lot more directly than a stronger one shows up. But ordinary Americans do benefit from a stronger stock market, whether they do so directly, maybe not, even if they don't do so directly, they do benefit indirectly.
And it sounds as if you're saying if they haven't felt it already, maybe they'll feel it soon.
Well, I would certainly hope so. I think that the improvement in the stock market, when the stock market goes up for odd reasons, then it probably doesn't mean that much. But when it goes up because the economy is improving, and we're seeing a broadening in the strength of the economy, and earnings have improved, that's something that should benefit everyone.
Final question. President Trump has said on a number of occasions that he deserves a lot of credit for this. How much credit does any president deserve when the economy booms?
My philosophy has always been give them credit when it's good and give them blame when it's bad, because they get all the blame when it goes bad. But President Trump's policies are pro-growth. The problem is that none of those policies have really been enacted. The one area where the president has made some progress has been lessening the load of regulation. And we see that in some of our surveys of small business, where the number of businesses that say that their number one problem is regulation has fallen substantially over the last 6 months. And I think that has contributed to a little bit of the pickup that we're seeing in business fixed investment.
Mark Vittner of Wells Fargo, it's nice to have a good report on the economy for a change. Thank you.
Glad we could help.